everyone. My name is Anita, and I'm the Benefits Administrator for the Traditional Bakery and Oklahoma City Bakery Panera Bread franchises. In this video, I will be discussing specific information regarding our franchise's 401k plan. If you're looking for more basic information on 401ks, such as what is a 401k, why should I enroll, or retirement strategies, please see the other videos that were included in the email you received, which contained this video. These general 401k related videos are also available online at One America's website, which is www.oneamerica.com. I'll provide One America's information again at the end of this video. All of the information I'll be discussing today is located in the Getting Started Enrollment booklet. This booklet was attached to the email you received containing this video. I'm going to put the booklet information on the screen now, but if you'd like, you can open that file and follow along with me, or you can refer to it later. You will need to print the applicable forms located in the booklet, which I will also discuss later in this video. So here's the information I want to start with. First, I want to talk about contributions. When you participate in the 401k, you will make what is called a contribution to the plan. This contribution amount will be deducted from each paycheck you receive from our franchise. There are two types of contributions you can make to our 401k plan. The first is a pre-tax contribution. As this name indicates, this contribution is deducted from your paycheck before any payroll taxes are taken from your pay. This contribution is still considered taxable income by the IRS, but the taxes are deferred until you withdraw the funds from the 401k, ideally when you are of retirement age or potentially in a lower tax bracket. The second type of contribution is a Roth contribution, and that simply means the contribution is deducted from your paycheck after other payroll taxes have been deducted from your pay. You can make either type of contribution, pre-tax or Roth, or you can make both types of contributions. Choosing which type of contribution to make is completely up to you and should be based upon your individual needs or preferences. Not only do you need to let us know which type of contribution you would like to make, you will also need to indicate how much you want to contribute. You can contribute as little or as much as you want, even up to 100% of your wages. The only limits on contributions are the IRS annual limits, and our payroll system is set up to ensure you will not go over this limit. Your contribution can be a percentage of your gross wages. That would be something like 1%, 15%, etc. Or it could be a flat dollar amount, something like $5 or $100. I do like to remind employees that if you elect to contribute a flat dollar amount, we will take this flat amount from your paycheck regardless of how much your wages are at that check. This can be important to remember if you are an hourly employee and your number of hours varies from paycheck to paycheck. If you elect to contribute a percentage of your wages, we will take this percent from each check, but the actual dollar amount will vary as your gross wages vary. To help illustrate this, let's say you elect to contribute a flat $50. We would deduct this $50 from every paycheck, regardless of how much your check is, even if it's just $50 or $550. Vice versa, if you were to elect to contribute 10%, and your check was $50, we would take $5 in contributions compared to $55 if your check was $550. If you are over age 50, the IRS permits you to make catch-up contributions beyond the normal IRS annual limit. If that is something that applies to you and you're interested in doing this, please contact me directly and we can discuss what is needed to make catch-up contributions. I'll provide my contact information at the end of this video. Changes to your contributions, the flat dollar amount or percent, can be made at any time. You can also stop or restart contributions, as well as change the type and or amount of your contribution. We, as your employer, want to help you with your retirement savings, so we provide a company match when you participate in the 401k plan. Our plan match is 50 cents for every dollar you contribute, up to 5% of your gross wages. For example, let's say you elect to contribute 5% of your wages, and that equals $100 from your paycheck. We as a company will contribute an additional $50 to your 401k account. In this example, a total of $150 was invested to your 401k account, but you only contributed $100 of that investment. That's $50 in free money. Note that we provide the company match even if you elect to contribute less than 5% of your wages. Just realize that you're not going to get the full benefit of our match by contributing less than 5%. Alternatively, if you contribute more than 5% of your wages, we will provide the match, but just on that first 5%. Anything above 5% will not have the match applied. The next aspect I want to discuss is vesting. Vesting is simply another word for ownership. You are always 100% vested in the funds you contribute to the 401k. However, the company match we just discussed has a vesting schedule. You'll want to consider your vesting level when it's time to withdraw the funds from the plan, such as at retirement age or when you are no longer an employee of our franchise. Vesting in the company match, the money we as your employer put into your account, occurs at a rate of 20% after 2 years of service. And to clarify, that is years of service, not years participation. Then it increases 20% each year until you are 100% vested after 6 years of service. To help illustrate how vesting works, let's assume you work for our franchise for 3 years and then you leave. You would be able to withdraw 100% of the money you contributed to the 401k and 40% of the company match that was contributed to the 401k. Alternatively, if you have been employed 6 years or more, when you leave, you would be able to withdraw 100% of your contribution and 100% of the company match. This brings us to withdrawals and distributions. Since the purpose of a 401k is to help you save for retirement, obviously if you reach any type of a retirement age, you would be eligible to take a withdrawal. While you are a current employee and not of retirement age, there are only 2 ways to withdraw funds from the 401k. That's either through a loan or a hardship withdrawal. There are specific criteria you must meet to be eligible for either of these withdrawals. So if at some point you feel you need to withdraw funds from your 401k, please contact me directly and we can discuss your options at that time. Again, my contact information will be provided at the end of this video. If you leave our employment and are not at a retirement age, you will have 3 options as to what you can do with the funds in your 401k. First, if your account balance is at least $5,000, you can leave the funds in the 401k plan indefinitely, or at least until you're age 70 and a half. You can continue to change your investment elections in the plan, and your funds will continue to earn or lose money based upon those investments. You just won't be able to add any new money to the plan. A second option is you can roll the funds over into another qualified retirement investment account, such as another employer's 401k plan or an IRA at a financial institution. The third option is you can have the funds distributed to you. At the time of distribution, you would be responsible for any applicable taxes, and if you are under age 59 and a half, you will also have to pay the IRS 10% tax penalty. One final aspect I want to mention before we look at the plan's investment options, and that is the plan's automatic enrollment feature. Our plan does have automatic enrollment. This means if you do not want to participate in the plan, you must complete a decline form and submit it to me before the deadline given to you for your enrollment date. This deadline was given in the same email that this video was attached to. If your decline form is not received by that deadline, you will be automatically enrolled in the plan, contributing 2% of your gross wages. As I've mentioned previously, you can change this enrollment later, but if you want to prevent any contribution from being made, you must make sure you return the decline form by the deadline. I'll be discussing the investment funds available to you next. However, I want to mention this now since it is noted here in the enrollment booklet. The contribution and company match made to your account must be invested. Our plan's default investment funds are the TIAA-CREF Life Cycle Funds. This means if you do not designate which investment funds you want your contributions to be invested in, we will invest them into the applicable TIAA-CREF Life Cycle Fund. The specific fund will be determined based upon your age. As with your contributions, this investment can be changed later if you would like, but just realize that the TIAA-CREF Life Cycle Fund is the fund we will use until you specify differently. Now let's discuss the other investment funds in our plan. The first thing to note about the investment options available to you is that all of them are investment funds. This means each fund invests in multiple securities, whether those securities are stocks, bonds, or cash investments. For example, any stock fund we offer is going to invest in the stocks of multiple companies and not only in just one. So it would not contain just Microsoft stock or just AT&T stock. It would contain multiple company stock. There is much information in this enrollment booklet on all the investment funds we offer. You can also find all this information online at One America's website. One of the first things you'll find in the enrollment booklet regarding fund performance is the annualized performance report, and this lists all of the investments offered. This may be a multiple page report in the booklet, so be sure to look for any additional pages. The report I'm looking at in this video is as of October 31st, 2019, but you may have a more current report in your booklet. You can also find a current report once you are logged into your account with One America. This report provides a couple things. First, this is a list of all the investments we currently offer except for one. The one fund we offer not listed on this report is the AUL fixed interest account. This fund is not listed on this performance report due to it being a fixed interest account, which means that there really isn't much variance in the fund's performance from year to year. This brings me to the second thing this report provides, which is fund performance. This report shows how each of the funds has performed over a given period of time. You can also find the net expense ratio for each fund, as well as the date that the fund was first offered. The other fund information you'll find in the enrollment booklet are called investment option summary pages. These pages give you more details on each individual fund. For example, you can see the investment strategy of the individual fund, how Morningstar has rated this fund's performance compared to similar funds, the portfolio analysis, which shows the type of securities the fund invests in, as well as the top 5 holdings for the fund. And then the operation section shows the inception date, the fund managing company, as well as the fund's expense ratio. When looking through the investment option summary data in the enrollment booklet, please note that the funds are in the same order as they were on the annualized performance report. This is to help you find the fund information easier. As with the other aspects of the plan, you can change your fund elections at any time, even on a daily basis if you would like. Our plan attempts to provide a variety of funds which meets most individuals' needs and preferences. This is also why we offer the life cycle funds, as these funds automatically adjust the investment risk based upon a targeted retirement date. We do realize that selecting funds can be an intimidating process, but there are many resources and tools available to assist you with this, and a great place to start is One America's website. The last thing I want to discuss are the forms located in your enrollment booklet. The first form is the participant enrollment form. This is the form you would need to print and complete to enroll in the plan, making a pre-tax or Roth contribution. Notice you will need to indicate which type of contribution you want to make, as well as the amount, whether it be a flat dollar or a percent. This is also the form you would use to decline participation. And you will also use the same form if you want to make a contribution change at a later date. Again, whether you're changing the type of contribution, the amount of your contribution, or stopping your contribution altogether. Please be sure to print both pages of this form, as it cannot be processed without your signature on the second page. Note that this participant enrollment form is the form that must be returned by the designated payroll deadline if you want to avoid automatic enrollment into the plan at initial enrollment. The next form is the investment option election form, and this is where you will make your investment fund elections. If you prefer, you can also make your investment fund elections online at One America's website once your enrollment has been established. One America's website is also where you would go to make future changes to your investment elections. Things to note on this form: the funds are listed in the same order as they were on the annualized performance report and the investment option summary pages. Again, this is for easy reference. When indicating your investment elections, be sure that all your election percents add up to be 100%. So if you are selecting just one account, then you'll indicate 100% in that fund. Also be sure to print and sign the second page of this form, as this form cannot be processed without a signature. The final form is the Participant Beneficiary Designation form. This form lets us know, in the event of your death, who you would like to receive your 401k money. If you are going to participate in the 401k plan, whether through your election or through our automatic enrollment, I strongly encourage you to designate a beneficiary. Make sure your beneficiary is current at all times and make changes when necessary, especially if you have a major life change event such as a marriage or a divorce. The beneficiary designation form is a 4-page form, though most of the information you'll need to complete is on page 3. Please be sure to sign the 4th page of the form as well. That's all the information I have for you in this video. I hope you found it helpful. If you have further questions, please feel free to contact me, or you may also contact One America with questions. Thanks for watching.